Okay, so we are looking at the activities from day 8. And while I've got the Nearpod screens going on, remember in activities in day 8, really we spent the first big part of that section of class on building the flowcharts. So if you have questions about whether your flowcharts that you created are correct, you can send me a email, and I'm happy to give you feedback on that. So I'm going to assume that you have a flowchart in front of you as we go through these solutions. And I'll see if I might have one on this device that I can pull up. Let me stop this and see real quick. Okay, so I've got them in here now. We will see how they are going to work when we get there. All right, so here are the flowcharts. This is the flowchart for GAAP assets held and used. This is the flowchart for goodwill, USGAAP goodwill, and just to emphasize the very, very key parts. Okay, there's the qualitative assessment where you don't use numbers and you just think about whether or not you have an impairment. Then there's the quantitative part where you actually have to calculate the fair values. You're going to calculate the fair value of that reporting unit. And then when it comes to the key questions, what you're looking at is this. Is the fair value of the reporting unit less than its carrying amount, the carrying amount of the reporting unit? Okay, so everything is in terms of the reporting unit and not just the goodwill asset. If in fact that fair value is less than the carrying amount, that's what indicates you have an impairment. And this box right here tells you how to measure it. It's really simple. It's the difference between the carrying value of the reporting unit and the fair value of the reporting unit. Okay, so you need to make an adjustment that brings that carrying value down to its fair value of the reporting unit. And that adjustment is all going to go through goodwill. And there's a little caveat here, I call it special case, in case the goodwill was too much. In case the loss was too much, meaning it was bigger than what you had in goodwill, you would only record it down to 0. Okay, so there's that part. You can refer back to it by just backing up the video. This is the IFRS assets held and used flowchart, and this is the IFRS GAAP goodwill flowchart. So let's just jump into the activities. Or just the beginning of class, we talked about the fact that big difference between subsequent measurement that we'd covered up until this point is that depletion and depreciation and amortization all deal with assets that are being used productively. So that's just the normal use of an asset. We're matching the cost to the period of benefit. The impairment situation is necessary when something happens that results in a significant decline in that probable future benefit. Something has happened that made that asset lose value such that we're not going to recover future benefit from it like we had originally planned. So with impairments, we're talking about losses because if you were to think back to your earlier accounting classes, losses are the situation where we have resources go out the door without any benefit at all, right? Expenses are resources out the door for current benefit. Losses are situations where we have a loss of resources without any benefit. Okay, so that's that piece. And there was a quiz. We didn't go to where do they get reported? And you guys all remembered losses are temporary accounts, so that would be the right answer. Temporary account, they go on the income statement. Why we do subsequent measurement, and this is the answer, the top reason. Okay, subsequent measurement is always necessary to make sure the balance sheet is accurate at the period. This slide just gave you some information about when GAAP says an impairment may have occurred. It's not an exhaustive list, but it's just giving you some examples of things. All right, an impairment example, we talked about McGraw-Hill and how they had to change things because ebooks replaced most people's hard copy books. All right, so now we have an example, though. We had the flow charts. Our first activity dealt with coming up with an impairment loss for USGAAP, assets that are held and used, meaning here's an asset. We thought we were just going to keep using it, get the productivity out of it that we expected, and all of a sudden something's changed to make it clear that we're not. So the activity says to use the flow chart that we prepared. So I'm going to pull that in real quick. Okay, so here it is. There's the flow chart. They went with USGAAP held and used, so we'll refer to that when we need it. What amount of impairment loss should be recognized? So if we open up the flow chart, we basically know the first thing that we need to do is, and I basically told you the events and circumstances indicate there's a problem. So this piece is kind of an assumed piece. All right, but looking down the flow chart, let's see what's next. Is the carrying amount greater than the undiscounted sum of future cash flows? So there's two things we need to make sure we can calculate. One's the carrying value, and one is the undiscounted sum of cash flows. So let's look and see with the information, first of all, what is the carrying value? Okay, so the carrying value in this problem is pretty straightforward. I'm going to abbreviate it CV. You remember this should be automatic at this point. That's going to be our cost minus accumulated depreciation. So in this problem, that is going to be equal to the 200,000 minus 75,000. Okay, so minus 75,000. Okay, which gives us, not a V, gives us 125,000. All right, so that's the carrying value. And then the thing we need to compare that to is the sum of the undiscounted cash flows. That's going to float around. All right, so the sum of the undiscounted cash flows. So we get $12,000 per year for 10 years. We don't need to worry about the 6% because we don't need to take a present value. Undiscounted cash flows simply means we add up $12,000 for 10 years. So that would be $120,000. Okay, so undiscounted sum of future cash equals 12,000 times 10 years equals 120,000. All right, so there's my undiscounted sum of future cash. And so the question here is the carrying value greater than the sum of the future cash? Well, you can see 125,000 is greater than 120,000. So the answer there would be yes, it is. All right, let's see if I can do something real quick. All right, trying to get those guys to fix on there. Not sure what I'm trying to do here, so we'll just leave it. All right. So the answer there was yes, and we have to deal then with measuring the impairment loss. Okay, so the impairment loss is going to be the carrying value minus the fair value. All right, we've got a carrying value of $125,000. Let's see if we can find from the problem the fair value. Okay? Yeah, those guys are going to stay put. It's causing me trouble. All right. Do we have a fair value? Yes, from the information, there's a second market. That fair value is $60,000. So, for this step, all right, put those back where they were. This is going to be, impairment loss is going to be the carrying value that we calculated of $125,000. That was the carrying value minus the $60,000 fair value, right, which came from the problem. And that tells us that there's a $65,000 loss, okay? So the idea here, again, is that we're going to want the value of the asset after we've recorded this impairment. We want it to reflect the fact that it's gone down in value by $65,000, all right? That is going to go there. Okay, so now moving down the flow chart. I know those little things are going to move with me. There's no reversals. Okay, so this is basically the answer. We've got a $65,000 loss. We used the flow chart. Now let's get the flow chart out of the way because I think there were some other questions. Yeah, there's a question that said, what's the entry? All right, and remember that the equipment account should reflect the loss. Okay, so if I had to come up with the entry here, I'd think about the fact that I know I need to record a loss, so this is going to be OE down, which I'm just going to put a minus because I don't have arrows on my iPad that I can find right now. All right, we'd call that an impairment loss or a loss from impairment. I'm going to say impairment loss, imparment loss. I'm going to spell it correctly. I'm going to say impairment loss because it's fewer letters. All right, we calculated that to be $65,000, so that's part of my entry. That would be a debit. And then I'm going to have to recognize that my general ledger account has the original cost of the equipment was $200,000 and accumulated depreciation was $75,000. So I want the end result, I want a value of $60,000 to be in my general ledger for this machine. So the rest of this journal entry is how I make that happen. Okay, so the way I'm going to make it happen is I'm going to reverse out the depreciation. So that's going to be a debit to accumulate. Oh, I don't know why that's doing that. There we go. Asset. Plus accumulated depreciation. That's going to be debited for the amount that's in the account, basically, $75,000. And then I am also going to, I'm going to credit the asset account. And it's basically, I'm crediting it for the difference between the original cost and the current market value. Okay, so I'm trying to hit that actual account and move it from the historical cost, which was the value we hoped to get out of it, the current benefit we hope to receive, to our best estimate of the benefit now that remains is the $60,000. So that will be our credit. Whoops, I'm sorry. I'm not going to make it the entry for $60,000. What am I saying? I want to make it for whatever it takes to bring the account from $200,000 to 60,000. All right, so this is my entry. I cut off the top of it. Let's see if I can make it fit. There we go. This is my entry. Just to make it clearer, that equipment account, trying to write that with my finger, had 200,000 in it. Here we made a credit for 140, which is going to leave us with the 60. Okay, and that's what we want. We want it to be the fair value. All right, so that's activity 1. All right, so let's look at another example. Okay, this is the IFRS example. So let me grab the IFRS flow chart. So here it is. So this is the IFRS flow chart. Assets held and used. So if you scroll back, you'll be able to see it bigger if you want to go back and see a bigger version of it. But I'll refer to it as I answer the questions here. So it's the same information that we just had. 200,000 costs, cumulative depreciation of 75,000. All right, so you know that carrying value, just before we even do any calculations, let's do that calculation. You know the carrying value, because we just did it on the last page, was 125,000. Just some information we might use. Okay, we have the same cash flow situation, 12,000 for 10 years with a cost of capital of 6%, and we have that fair value of 60,000. So we're using the flow chart from IFRS, it's right here, to look and see what we do. So we're again assuming the events indicate that we have an impairment. One of the things we have to do first with IFRS is decide the recoverable amount. So we have to determine our recoverable amount, and that is just a definition. It's the higher of two values, the value in use and the fair value less cost to sell. Now the fair value we already talked about for this problem from the last example. The fair value was the 60,000. So our real question here when we're trying to do IFRS is, what do we use for this value in use amount? Okay, this value in use, right? And if you look back at your notes, that was the present value. That's what we said. Make sure you write down that you know that's the present value of the future cash flows. So that involves taking the present value of that same $12,000 each year for 10 years. So when we're thinking about present values and the idea of $12,000 for 10 years, that sounds a lot like the present value of an ordinary annuity. Okay, so to do that, I'm going to need a factor. So I'm looking for the factor here for n equals 10. And the interest rate of 6%, because the problem gives you that. Whoops, did it twice. And I need that factor, and in fact, that factor is what? Look at the factor. Is 7.36009. Right, so there is my present value of an ordinary annuity factor. All right, now that's not an answer. That's the present value factor that I'm going to use to calculate the present value of that $12,000 annuity, and we're going to call that the value in use. Value in use equals the present value of future cash flows. This is the difference here between IFRS and USGAAP. So we had $12,000. That was our annual cash flows for 10 years. So that's our annuity, if you will. We're going to multiply that by the annuity factor. And that is going to give us a value for our value in use of 88,321. Okay, just so you remember, we're talking dollars here. So 88,321. Just so we remember, this one was also dollars. Of course. Our fair values are dollars and our carrying values are dollars. All right, so the question then becomes, I'm sorry, I jumped questions. The question becomes, which of these values is higher, 60,000 or 88,321? And I think you all would immediately go, well, I can tell, 88,321. So 88,321 is going to be my recoverable amount. Okay, so this is important lingo, right? It all is there for a reason. So the recoverable amount is going to be 88,321. Okay, so now I come back down to this question, and I'm going to compare the carrying value to the recoverable amount. So the recoverable amount was 88,321. Why? Because 88,321 is higher than 60,000. Just a rule. Okay, so I pulled down my carrying value, compare it to the 88,321, and all of you can say, oh, I see. There's a difference. The carrying value is greater. 125 is bigger. That means I have a loss. One step lower then is where we calculate the loss. And the loss is the difference between the carrying value and the recoverable amount, which is exactly what I have written there. Sorry, I didn't need to rewrite that. But in our problem, that means we're calculating 125,000 minus 88,321. And we get, whoops, I put multiplied there. That's crazy. Minus equals. So we're going to come up with a loss of 36,679. Okay, so that is going to be my loss amount. 36,679. There's my loss. 36,679. Okay, so that takes care of figuring out that IFRS loss. So I'm going to get rid of the flow chart. I still have the little pieces here. We'll get them out of the way. You need to make sure you know how to calculate all those little pieces, however, because that's what you had to use to get to the journal entry. The journal entry here is going to be a little bit easier, I guess, maybe just if you think of it that way, to write the impairment loss, which I spelled wrong again. That's my debit for 36,629. So you see that's a lot lower. If you were to look back, our impairment loss under USGAAP for the same situation, the USGAAP loss was much bigger. That doesn't necessarily always happen, but let me think about this. No, it could end up to be the same if our fair value was higher than the recoverable amount. I think we would have gotten the same answer. You can think about that and tell me. If you work it out and find it different, I would say that is very impressive. Thank you for that information. All right, so we got 36,679, not 629. You're saying, where did she get that number? She didn't. Okay, 36,679 would be my credit there. All right, and that would take care of my impairment loss for IFRS assets held in use.